analysis, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have about 43 minutes now until the closing bell. The equity market a little defensive today on some concern about rising inflation. Let's get you the latest now on the price action. Bill Maloney is at the Bloomberg Macro Squawk Desk. Hi, Bill.
And good afternoon, Doug. U.S. stocks in the red right now, with the Dow currently down 282 points. S&P's dropped 44. NASDAQ is lower by 90. The U.S. 10-year yield at 3.03%. Gold is little change. Oil is climbing, but Bitcoin is lower by 3.8%. Among the main 11 S&P sectors, all were in the red, led by declines in real estate, materials, and utilities. Leaders to the upside in the Dow, Salesforce, and Caterpillar, while Intel fell 5.7% and led to the downside. In deal news, the Washington Post reported that Twitter plans to comply with Musk's demands for bot data, and Zendesk dropped 7%, as CNBC said a potential private equity takeover is less likely. In other news, the SEC chief has taken aim at payment for order flow, and ExxonMobil traded to an all-time high. Wrapping things up, Five Below reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, Bill, thanks. To get live audio updates right on the Bloomberg terminal, SQUA, that is the function. Then, of course, the green go key. I'm Doug Krisner, and that is your Bloomberg Business
Connection
Flash.
lost.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Tim Stenivek. Well, we mentioned we're covering a lot of our most read stories on the Bloomberg today, and one of them happens also to be the Bloomberg Take. It's about the hedge fund that borrowed billions to buy stakes in private companies, posted massive gains, but as valuations fade, Tim, it is a different story.
Yeah, we're talking about Dan Sondheim's D1 Capital Partners. The story by Hema Parmar and Miles Weiss. Hema Parmar is hedge fund reporter for Bloomberg News. She's with us right now in the Bloomberg Interactive Broker Studio. So what happened? What did you find in your reporting with D1?
Yeah, so, the story looks broadly at some of the issues and some of the concerns that we're seeing in this space, as many hedge funds have really pushed into privates. And when we look at D1, what's really interesting is that they took a $2 billion loan from JP Morgan and used that to invest more in private companies. And this is a firm that already has a great deal of exposure into private companies. Some of them are, bigger private equity type things that, may be doing very well. They have had to mark down some of the private stuff. But what it shows us is an interesting use of being, bolder in pushing into privates, which is reflective of what we're seeing kind of across the industry, which is traditional hedge funds doing more private equity stuff, having more commingled funds, and in this environment, what some of the concerns that brings up broadly.
Did hedge funds not typically venture into privates and private equities in particular?
Yeah, so they didn't for the longest time. Back when the industry was beginning and in their formative years, it was a lot of long-short equity. Yeah. Typically, there were some sort of early movers and people that were doing a little bit of privates, like Tiger Global. But generally, we've seen a slow ramp up and then more of a fierce ramp up into privates in the past couple of years.
I have to say, when Tim and I were out at Milken, we're just like, wait, it's not about public markets anymore. It's all about the private market. And I know we've done a lot of coverage here at Bloomberg. We've talked to Jason Kelly, who's very early on in the private equity world here for Bloomberg. But I just feel like it was all about private
was it
capital.
Apollo's Mark Rowan who said that he sees that retail investors are going to be increasingly investing in private markets?
So hedge funds also obviously buying on. What I wonder is, it's all good while the markets are up and valuations are going up. Yes. But private equity eventually has to exit. Right now, we're in a very volatile market. So what does this mean? You already talked about some markdowns.
Yeah. So people are kind of expecting, as we look forward through the rest of this year, more markdowns across the industry. Now, hedge funds can mark on a quarterly basis. Okay. So we may see some more significant markdowns industry-wide as we look through the end of this month and then in the next 2 quarters of the year. But what's interesting is that, we're seeing that it's the funds that they're getting hit on both sides, right? So it's their equity fund, their equity positions in some tech companies that are falling. At the same time, their very large portfolios in privates are also struggling. And so it's kind of like a double whammy for a lot of these funds. Multi-strats are doing fine, macro funds generally are doing fine, but we are seeing this little corner where, people are just thinking about, how does one fund value an asset and how does another fund value an asset? And there's a lot of conversations around that right now.
So what does that mean, Hema, for liquidity, because when it comes to hedge funds, investors in hedge funds expect that their money is liquid.
Yeah.
It's not like that when it comes to private equity or when it comes to venture
Right.
capital.
Yes. So
And you're paying for that lockup.
So that's one of the big conversation pieces right now is looking at liquidity. So some funds will say, okay, from the get-go, if you invest in us and we do privates, we're going to put the private investments in a side pocket.
Will you explain what that is?
A side pocket? Yeah. So we're going to take, your investment through us in whatever company, and it's going to be in a separate space. And if you want to pull your money, you can get all the stocks back that you want, that you've invested through us, but anything in a private company, we're going to hold on to that until we exit that, and then we'll realize the value. So that they don't have to then start paying out, sell the privates, or that they might have to sell stocks and disadvantage existing investors if they have to get rid of stocks to fulfill redemptions, and then
So
the
kind of a
portfolio
backstop
changes.
for investors in terms
It's
of what
supposed to
happens with
protect. Yeah, it's supposed to protect investors.
What kind of returns are we seeing for these firms, though, that are venturing into privates? How much of a hit are they seeing?
So if we look at Tiger Global, for example, we've talked about this firm
Yeah.
before. They do publics and privates. They're down about 52% for the year, on a combination of both their stocks being down and the markdowns on the privates. So there are some funds that are seeing, double-digit losses so far, and it could be a combination of both. We're not saying this is entirely privates, but the funds that tend to be doing among the worst are getting hit on both sides.
I mean, the problem is, depending on what happens next in terms of our economy and the market, I mean, if those privates, right, don't come back, I mean, they could ultimately have to write them off altogether.
Well,
or no?
Well, it depends. I mean, there's some situations where, like, let's say an Asian company is banned and where it is, and that stuff would be written down and probably isn't worth much anymore. If there's a situation where some friends might still believe in the fundamentals of a private company, and they might be holding on to it for a number of years and expecting that it can bounce back.
Right.
And that situation, a side pocket, is helpful for them to keep that investment, because they don't want to sell, nor do investors want them to sell
Right.
too cheap.
What does it take for them to kind of, we just got about 20 seconds to kind of just write it off completely?
I mean, if the value of the asset is
Down.
zero,
It's zero.
for whatever reason, it's nothing.
Then they just get rid of it. But it is definitely a sign of the times in terms of what we're seeing in hedge funds. We got to run. Thank you.
Thank you.
She's been busy and keeping us up to date on the whole hedge fund universe. Hema Parmar, she's hedge fund reporter at Bloomberg News here in our Interactive Broker studio.
Check out this story and other Big Take stories on the Bloomberg Terminal or at Bloomberg.com/Big Take.
You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on Bloomberg Radio, watching us on YouTube. Carol Massar, Tim Stenovic, and soon we'll be joined by our Ed Ludlow, who sat down for a conversation with none other than Kathy Wood of ARK Invest.
Yeah, she had comments about inflation, about the performance of ARK's investments this year, the ETFs. We're looking forward to catching up with him in just a couple of minutes. In the meantime, let's get over to Doug Krisner because we're a half hour away from the close. Hey there, Doug.
Hey, Tim. Yeah, this inflation worry is one of the things holding back the equity market today, and it's being underscored by a spike in crude oil prices. WTI right now, very near 2.5% in terms of an intraday gain. We're trading around 122.30, and that's given a lift to the S&P Energy Group, which is up about 0.2% right now. But despite that gain, the equity market down today with the Dow off about 0.8%. We've got to deal with this U.S. Treasury curve that's been moving up throughout the day. A 10-year yield now above 3%. We're at 3.02%, and a 2-year Treasury yielding 2.77 with a gain of about 4 basis points on the day. Twitter shares very heavily traded today. The Washington Post indicating earlier that Twitter's board is planning to comply with the demands from Elon Musk for internal data. Twitter shares right now better by about 0.7%. Also want to point out State Street. The stock is off 4.6% right now after the bank declined to comment on a report from Zurich, Switzerland, that State Street is looking to acquire Credit Suisse. Credit Suisse ADRs right now off about 0.7% in New York trading. I'm Doug Krisner. That's your Bloomberg Business Flash.
I appreciate that, Doug Krisner there. Well, Kathy Wood, founder, CIO, and CEO of ARK Invest, well known to our audience, followed very closely for her investment moves. Well, she sat down just about 2 hours ago with Bloomberg News West Coast correspondent Ed Ludlow for a fireside chat at the UP Summit in Bentonville, Arkansas. That summit all about mobility, how the world moves around, something Kathy certainly is well versed in. And for more on his conversation with Kathy, let's bring in Ed Ludlow. Ed, good to have you here. We want to get to this conversation. Tell us what you really kind of wanted to know from Kathy.
I wanted to know, does Kathy Wood think Kathy Wood is right? Do you guys know what I mean? That year to date, ARK Innovation ETF is down more than 50%. The data also shows that it's getting net inflows, right? And so I asked her, why do you think that is? Her answer was, well, investors trust us, that even though our products are not performing right now, they have absolute conviction that the data approach they have, they're deeply into research, they publish their research publicly, so it's available to all investors. They stick by that. And when under pressure, it's good to ask somebody sometimes if they got it wrong, and she maintains that they will get it right in the long run.
Speaking of sticking with it, her comments to you on inflation I found particularly fascinating, Ed.
Yeah.
Because we haven't spoken to her in a few weeks, so she added the idea of the inventory surges that we saw from companies like Walmart, based in Bentonville, of course, where you are, and Target as well. What did she say about inflation?
Yeah, so the context for the radio audience here is that Walmart and Target reported very heavy inventories. Basically, they've got a lot of stuff that nobody wants to buy. That was damaging to those stocks this week and in previous weeks. Kathy Wood sees it a different way, that what retailers often do is dramatically cut prices on that inventory to shift it, right? They either bulk sell it to a third-party discount retailer or they sell it on the cheap. Now, that will have a deflationary effect. And it was interesting because Walmart's US CEO, John Turner, who was speaking last night, kind of made the same point, that Walmart has a lot of inventory, but they're able to sell it quickly, shift it quickly, even if they have to put it as a discount. And she basically, my one regret is I wish I'd asked for her inflation call. Where does she see inflation going over a certain time period or horizon? But I think she basically feels that stagflation is not a risk, and that what she sees out there in terms of innovation and what tech companies are doing has the risk of carrying massive deflation, which is a world away from where we are today.
Well, she talked too about inflation, also talked about the performance of their flagship performance and their fund. And I should put out the ARK Innovation Fund It is down. I just pulled it up. It's down about 52% so far this year. But if you look from the end of 2016 to the end of last year, it was up 371%. Like, it's a little perspective on this. Check out, though, what she had to say about performance and also about rates to our own Ed Ludlow earlier today.
If you look at our performance, our flagship's performance, from the low in COVID to the peak in February of 21, that was 360% increase. Innovation solves problems. We had a lot of problems through the coronavirus. Innovation solves problems. We were rewarded accordingly. Since then, peak to trough, when we hit our trough, thank goodness we're past it, down 75%. Why? Inflation and interest rates.
All right, that, of course, is Kathy Wood. So, Ed, your thoughts?
Yeah, so prior to that on-camera conversation, we ran through this point as we were getting ready off stage. And, you know, this is where you remember the names that Kathy Wood is talking about. When she was, you know, the success. I mean, if you're a Bloomberg user, bring up the ETF on your chart over a 2-year period, for example. They enjoyed the benefit of holding companies or having members in the group of companies that were the pandemic darlings, your Zooms, even your Teslas that showed robust ability to circumvent supply chains. But some of those stocks were also the most susceptible to the rates narrative, right? They're higher multiple stocks, you know, stretch valuation software stocks, Zoom being in that category. And she felt that actually what the market is misreading or misjudging is that Zoom has some staying power. That's been a topic of conversation in recent weeks that has relevancy in this other world. But she flagged the US 10-year Treasury at 3%, and she's talking very much about GDP growth. And she does not basically see this recession risk necessarily. And she points to the US 10-year yield at 3% being evidence that investors feel the economy can continue to grow at an annualized rate of 3 to 4%, which I thought was quite interesting, because to say it's contrarian is a bit of an understatement, isn't it?
Yeah. Go ahead, Carol.
Well, and, you know, I have to say, like, I've been talking to her since she began back in, I was just trying to look at my first interview with her, was it 2014? And, you know, at that time, I mean, she had no money, and she was really being out there when it came to a name like Tesla and Elon Musk, when nobody seemed to get behind him. And so, you know, you either buy into the idea of this long-term thinking and innovation, and I got to say, Ed, so many of the CEOs we talk to and leaders, and we've seen kind of mimics, if you will, on Wall Street in terms of creating innovation, disruptive funds for investors to invest in. You know, it's a longer term play, and I guess time will play out. It doesn't mean even, you know, successful investment managers, they will have tough year, but time will tell whether her strategy is the right one.
Right, and on stage she did say that she thinks they'll be right. You know, I think she even said 5 years from now, I'm sure we'll be right. The difficulty, her criticism of other investors is they're looking in the wrong places. You know, she has this big call about GDP growth over the next decade of 50%, 50, which is kind of a really big number to get your head around. And she puts a lot of that on the growth of artificial intelligence. There is no backward-looking data on artificial intelligence.
Right.
You know, the pace of innovation is happening quickly. Now's the time to jump in because it will happen in real time, and she feels they're the only ones keeping up.
We got to run, kiddo. Great job. Good to check in with you. Ed Ludlow, West Coast correspondent at Bloomberg News, joining us from Arkansas.
All right, from Arkansas to Washington, D.C. we go for the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Police say a man was arrested overnight near Justice Brett Kavanaugh's Maryland home. The man has been charged with attempted murder. This is House Republican leader Steve Scalise.
Thank God law enforcement was able to arrest the man who was intending on committing that action.
Again, Congressman Steve Scalise. According to an affidavit, the man said he was upset over the leaked draft opinion indicating the Supreme Court is poised to overturn Roe versus Wade. The affidavit goes on to say he planned to kill the justice, then himself, thinking it would give his life purpose. Well, some of former President Trump's least favorite Republicans have survived their primaries. Bloomberg's Ann Cates has more on yesterday's results.
Primaries were held in 7 states, and 5 of the 35 House GOP lawmakers who voted to create the bipartisan committee to investigate the January 6th insurrection at the Capitol, and whose names were on ballots yesterday, appear to have survived at the polls. For the Democrats, according to Politico, they had a turnout problem in California. As of early Tuesday morning, 3.3 million ballots had been returned, far less than at the same point last year. In Washington, Ann Cates, Bloomberg Radio.
British prosecutors are now moving to charge former film producer Harvey Weinstein with 2 counts of indecent assault against a woman in London in 1996. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you, Nan. Squeezing a lot there in that World of National News update. We appreciate that. Hey, we mentioned we are covering a lot of the most read stories. I do feel like we're just going down the menu because this one's on it as well.
Yeah, we're talking about Arkansas. We're talking about Colorado. We're talking about the Walton family.
Right.
This story, we were wondering who would come out and buy the Broncos, right?
Right. I mean, when they went up for sale, we knew it was going to be a big buy. These teams, these franchises don't come up often. They're very valuable, and now we know.
A group led by Rob Walton, the son of Walmart founder Sam Walton, agreeing to buy the National Football League's Denver Broncos for an amount that's likely to be the highest ever paid for a U.S. professional sports team.
All right, so who's in the group? Walton's group includes his daughter Carrie, her husband Greg Penner, along with Melody Hobson, familiar certainly to our air as well, Chief Executive Officer of Ariel Investments. The two sides said in a joint statement yesterday they did not disclose terms for the deal. It does need approval from the NFL's Finance Committee and league ownership. Author was worth $4.65 billion, according to ESPN, citing NFL sources, though it did not identify.
Walton was an early frontrunner in a crowded field of contenders. He's 77 years old. They were vying for the first NFL team to go up for sale in 4 years. It included billionaires Josh Harris, the co-founder of Apollo Global Management, and mortgage mogul Matt Ishbia. But the former Walmart chairman has vastly more money to deploy. He's the 17th richest person in the world. He's got a net worth of close to $59 billion. That's according to the Bloomberg Billionaires Index.
And this is interesting because Melody Hobson, a Black American, she's joining the group at a time of increased focus on the lack of representation among owners in the 102-year-old NFL National Football League, of course, where 7 out of 10 players are Black, yet no Black person has ever held a majority stake in a team. This is something we talked about big time at the Power Players Summit just ahead of the Super Bowl earlier this year on the West Coast.
Yeah, she's also chair of Starbucks, and she's on the board of Bloomberg Philanthropies. It's the philanthropic organization of Michael Bloomberg, who is the founder and majority owner of Bloomberg LP, which does own Bloomberg News.
Yeah, the NFL commissioner, Roger Goodell, saying that the league has wanted to make it easier to enable Black ownership, but the steep price of those franchises, combined with rules that limit the use of debt and require the primary franchise owner to have a 30% stake in the team, mean only a small circle of people can actually make a bid.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
A spike in oil prices today is underscoring the concern about rising inflation. We heard from the government today. Data for both crude inventories and gasoline stockpiles showed a drawdown in inventories. And we also learned that crude oil production was unchanged for a fourth straight week. WTI in the electronic session up about 2.6% right now, 122.45. Energy, one of the few positives for the broader market. We do have the S&P 500 down about 1% right now. Dow Industrial Average weaker by 0.8%. And the NASDAQ Composite is off about 0.7%. We have yields across the U.S. Treasury curve moving up today, with a 10-year at 3.02% and a 2-year Treasury yielding 2.77%. In terms of corporate news, Twitter's board has reportedly or is reportedly planning to comply with Elon Musk's demand for internal data. The Washington Post saying this data could be provided as early as this week. Twitter shares right now better by about, let's call it 0.8%. And we have shares in State Street trading off nearly 5% now after the bank declined to comment on a report that it is looking to acquire Credit Suisse. ADRs in Credit Suisse today down about 1%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
If ever there was a Pyrrhic victory, Boris Johnson's win in the Conservative Party leadership challenge this week must qualify. Although the UK Prime Minister garnered enough support to stay on in his role, more than 40% of Tory MPs told him to go. There's little mystery why. Johnson's government has run up a dismaying catalogue of broken promises and bungled initiatives. It has seriously mismanaged Brexit and the response to COVID and left many confused about its economic priorities. The Prime Minister's threadbare authority is now completely shot. His net approval rating stands at minus 45%. A determination to hang on in the face of such disapproval is unlikely to serve the Conservative Party's interests, much less the country's. The Tories' best case for retaining Johnson's services is that, for the moment, they have no obvious successor. Monday's embarrassment suggests that they'd better find one, and fast. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is the Drive to the Close. We are under 10 minutes away from the market close. Bloomberg Business Week is brought to you by PPAC Private Wealth Management. A portfolio is more than a collection of assets. It's a path to your future. Visit ppacprivate.com.
All right, we're definitely off our highs of this session. In fact, as you heard from Doug, we're down across the board. The S&P biggest hit on a percentage basis, down more than 1.1%. So let's get to it. Robert Stimson is with us, Co-Chief Investment Officer at Oak Associates, on the phone in Akron, Ohio. Robert, good to have you here on Bloomberg Radio. This trade, it does feel like the equity market's trying to find a bottom, but it's hard to say when that will happen. What about, the rate environment? Do you feel like things are starting to settle there?
Well, thanks for having me.
Sure.
I do think the market has been better the last week or so, and today's decline is just a reflection of ongoing concerns and fears regarding the macro environment. Certainly oil prices are a concern, but a lot of the well-publicized issues are very well understood, and the market tends to suffer more for things that it doesn't expect. So we're pretty well versed in inflation. We're pretty well versed in quantitative tightening and the job market. So I think the weakness today is more a reflection of just where we've come from over the last week rather than, a new direction.
How hard is it to be a fund manager, especially of the funds that you are managing or co-managing? A lot of it's growth plays, technology. How much fun are you having?
At Oak Associates, we have a big focus on quality, and in every market environment, there are opportunities. And we think when you invest in quality stocks for the long term, these sort of environments present opportunities that maybe we didn't have 6 months ago. Certainly, inflation is a concern for valuations longer term, but it's also narrowed some of the opportunities in the market as well. And we think that's a good thing for the high quality companies out there that are still very profitable.
Robert, what are the unknowns with today's market? Because you did mention that the market understands quantitative tightening. They kind of see what's happening with inflation, but what are the ongoing fears about the macro environment that are still unclear? And then when do they become clear? Because there's always uncertainty out there.
There is always uncertainty, and I think the market is grappling with the idea of, is the Fed going to continue on an aggressive path to raise interest rates to help combat inflation? But the unknown is whether they really have that ability. If inflation is really going to be driven by food and energy prices that hits the consumer pocketbooks, we could see rates go up and inflation not really come down. But when you look at other statistics in the market, other inflationary measures such as gold have not really moved much over the last year. So we do think there is confidence that the Fed is on course to tackle inflation, but the timing is always uncertain.
You are a fund manager. I want to go back to what you said, getting into quality names. I think you oversee some 7 or 8 different mutual funds. If I look at the Oak Red Tech Select Equity Fund, specifically, I'm just looking, forgive me, I'm going through a bunch of numbers here. Year to date, it's down about 19%, 88th percentile according to Bloomberg data, doing better than what the NASDAQ 100 is doing, which is down about almost 23% so far this year. But your holdings are obviously like a who's who: Apple, Amazon, Alphabet, Microsoft, Cisco, Meta, Intel. Where have you, among those, are they all quality names? Are they all names that you might have been adding to on the pullbacks? Give us, I'd love some specificity if you could.
Certainly, we have been adding to some of them in this pullback. And our Red Oak Tech Funds kind of takes the approach that we're looking for a financials first approach within technology. So it's not just about what the business model sells or the next generation technology. It's, are these companies generating high returns for its shareholders, and are they compounding those returns for the benefit of its stakeholders? So when you have very high return on equity business models that are either buying back stock or issuing dividends or reinvesting in a high return on equity business, it's kind of like the stock market's version of compound interest. So it's a very high quality portfolio. We are adding to some of those names, particularly on more of the business services side.
Can you say which ones?
Yes, certainly we've been added to more of the infrastructure plays, names like Cisco Systems and IBM, because their products and services are business to business for the most part. And if you're worried about the consumer and you're worried about inflation, we think businesses are going to continue to spend, continue to revamp their infrastructure as the world kind of returns to work from the work from home environment. Tech companies that sell to other tech companies or other businesses, we think are a more safer way to play tech right now.
And thank you for correcting me. It's Red Oak Technology Select Fund. I kind of misread the heading on the screen here, so appreciate that.
Hey, Robert, I want to talk Korn Ferry International because that's another company that you're bullish on. It's an executive recruiting firm. Why are you bullish on it, especially if we could be on the cusp of a recession?
Well, the stock's been down, year to date on fears of a recession. But the pandemic really did change the labor market. We had a lot of people drop out of the labor force, a lot of people retire early, and businesses are struggling to hire people in general. And we think when it comes to more senior level positions, companies are going to have to outsource the recruiting, attracting, and retention of talent in order to be competitive. And just as businesses need people, they're often short-staffed in those areas that are needed to help find and recruit people. So the pandemic has kind of created a longer-term opportunity for executive search companies like Korn Ferry, and expanded the market opportunity to a certain degree. So not only are there bigger opportunities, but with wages up and a more competitive labor market, income is up. So they've got more placements and more income from those placements. So it's kind of a dual growth driver. And that's a characteristic we like to find in companies for all of our portfolios.
Well, great to talk some names with you. So definitely come on back with us. Robert Stimson, he is Chief Investment Officer over at Oak Associates, joining us on the phone from Akron, Ohio, and fun to talk certainly names with him. Not so fun if you're trying to eke out some gains in the equity market.
Not going to happen, Carol.
No.
Not going to happen.
It was a different tone earlier today, but we've been dragged down and we're off our lows, but we aren't too far from them. S&P 500 still down about 1%. Dow Jones Industrial Average a decline of 0.8%, and the Nasdaq just down about 0.75% on this Wednesday. All right, time to head over to our Bloomberg TV team for Beyond the Bell, live on radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast, joined right now by Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and YouTube. Carol, looking at the S&P 500, pretty much back to the lows of the day here. Really haven't seen any major bouts of buying at all, at least on the S&P on this day.
Yeah, different tone from what we saw yesterday and certainly from the last couple of days when we saw the S&P 500 up 2 days. Really a laggard, I mentioned it earlier, is the semiconductor names under a lot of pressure. The stock's down right now, Tim, about 2.4%.
Yeah, we just had a really interesting chat with Robert Stimson over at Oak Associates. He said that there's confidence that the Fed is on course to tackle inflation, but the question that he has is about how aggressive it's going to be in trying to bring it down.
As in questioning whether it should be more aggressive, because many feeling that these levels with inflation in the print, we're going to get above 8%. They need to go hard, they need to go fast, but it is going to hurt, of course, the overall economy. It is the chorus of voices saying it is getting harder and harder to land this softly. Of course, we just heard from the latest Nobel laureate today, Taylor.
We did. Of course, Schiller, I think, is the one that you're referring to. We spoke with Anna Hahn, not a Nobel laureate, but certainly really smart in her own right. And she was saying that still, even if the Fed continues to move and she's looking at 350 basis point hikes here, that really still only looking at about a 40% odds of recession. Romaine, I was reading a note from the business cycle report from Merck Investments. They're still only seeing 35%, that the indicators are strong.
Yeah, the indicators are strong, and I think the problem is that no one really knows, and I don't mean that as a diss to anyone, but sometimes we get to these sort of precipices where it's very clear we're headed towards a recession, and sometimes we're at a stage where it's very clear we're going to avoid a recession, and I think right now we're kind of somewhere in between, and I think that's maybe why you're seeing kind of a lot of the sideways movements, at least on a week-to-week basis with regards to this equity market. You're looking at the S&P 500 right now. That's going to close the day right around that 4,100 mark. And again, it's kind of been bouncing around between that 4,000 level and that 4,200 level for quite some time now. It's lower by 1% here on the day. The Dow Jones Industrial Average is down by about 0.8% here on the day, while the Nasdaq Composite is going to finish lower by 0.7%. And as far as some of those cyclicals, well, you talk about the Dow Transports that are down 4% on the day, mid caps that are down about 2%, and the Russell 2000, Carol, down 1.5%.
You know, you guys were talking about sentiment. I mean, it may not be, officially a downturn or a recession, but if people are nervous and they pull back, it might as well be. S&P 500, Taylor, you're going to get into the groups, but most of the names in the index, 452 to be exact, on the downside today.
Yeah, and you really see that on the individual sector level as well. For our radio audience, we're looking at some of the best performers, the worst performers, sort of two levels underneath the surface, and there's a lot of red, even on some of the, quote, best performer screen. There's actually only 3 sectors here in the green today. It's autos, energy, and media and entertainment, but still most of that is flat, not a whole lot to write home about. Let's take a look at some of the losers, Carol. This is where things really get interesting. It feels broad-based. You think about some of the banks and some of the financials. Those were under pressure today. Semi-components, I know you've talked a lot about that, Carol. Real estate and also transportation. We're continuing to be concerned a little bit about some of the inflationary and some of the supply chain impacts of all of this post-COVID world.
All right, so let's get to some of the gainers. I had to change my list a little bit because the gainer turned negative. But one that definitely stayed in the green today was shares of Alibaba, really holding on to most of the up move in today's session, closing up just shy of 15%. Again, we continue to see sentiment easing when it comes to those Chinese names trading over in Asia, trading here in the United States. China approving a second batch of video games, so it does feel like China officials are easing when it comes to some of those internet names. Roku, want to mention that one, up 9% in today's session, rallying big time. This after Insider reported that the company had closed the trading window for all employees, a move that stopped them from selling their vested stock. So that'll do it. And then I want to mention Etsy. This was a top name in the S&P 500. No real news except CalSTRS coming out and backing Etsy on 3 of 5 proposals at their upcoming June 15th meeting. Stock is still, though, down about 60% so far this year, and about 11% of the float is shorted. So there's a lot of negative tone continuing to surround Etsy, Tim.
All right, speaking of negative tone, Altria Group, the company that sells more.
Etsy the other day.
What?
What's that?
I just bought something off Etsy.
Bow tie?
What'd you buy?
No, not a bow tie.
What was it?
For the dog?
I'm going to teach you how to wear a bow tie. Yeah, any tie, actually. I don't think I've ever seen one.
All right, deal. We'll do it. Let's talk Altria Group. It's down 8.39% today. It's the company that sells Marlboros here in the U.S. It's having its worst day since March of 2020. This after Morgan Stanley downgraded it to underweight, giving the stock its only negative analyst rating. Morgan Stanley essentially saying that rising gas prices and weaker consumer sentiment are likely to weigh on cigarette volumes. Charles Schwab also falling 2.6% today. Shares of a lot of online brokers actually fell after SEC Chair Gary Gensler outlined a plan that takes aim at payment for order flow. Gensler asking the SEC staff to consider creating an order-by-order auction mechanism so that retail traders could obtain the best possible pricing. We also saw shares of Robinhood fall today. Carnival Corporation falling more than 6% today. A lot of cruise companies. Thanks to Morgan Stanley cutting the price target not just on Carnival but
Those things are
Royal
full.
Caribbean,
I was walking down the west side,
Norwegian. You see them all the time here.
Yeah.
Well,
Are you getting on one?
I'm not. Are you?
Case in
Not me.
point.
No,
Yeah.
times are hard out there. And you heard we're headed towards a recession. People can't even afford Coke anymore. They got to pour vinegar into seltzer water just to get the taste of it.
Well, that's what Morgan Stanley essentially saying. Weak channel checks when it comes to the cruise lines, growing macro risks, and rising debt costs too.
Remain is such a man of the people, balsamic vinegar and seltzer. Meanwhile, I'm looking at
Is that the secret formula?
Apparently, according
Yes, the
to
secret
our
sauce.
producer Faith, she's giving us all the gossip. Meanwhile, let's look at the commodities that aren't balsamic vinegar and seltzer. I'm looking at commodities that are pushing higher. And once again, this is why we've got the inflationary pressure that is so front and center for investors today. And indeed, why yields have moved as they have. Brent crude up 2.9%. We're $124. WTI $122. Once again, the inventory levels in the US just showing how so tight we are in terms of the supply side of this market. We can go over to what's happening in the foreign exchange market, therefore. And actually, I mean, nothing's really being dictated by commodities. Everything's being dictated by a strong US dollar. We're up 0.3%. And indeed, you're therefore seeing the Japanese yen has just been a story of weakness. I've said it over the last couple of weeks, if not months. The yen now off by another 1.25%. This, as we see at a 20-year low, the real divergence here in terms of central bank policy. We're going to get the ECB tomorrow. Many feeling that, of course, will pull back on quantitative easing, maybe talk up the idea of some sort of rate hike. And, of course, the euro is currently trading lower against the dollar and weakening against the dollar. And I look at sovereign bonds, which across the board have been a sell of the day, Taylor.
Yeah, you certainly saw that, Caroline, here in the U.S. as well. We've been talking a little bit on this program, a decent threes yesterday or a few days ago, sort of a weaker tens auction today, and really hard to be finding buyers at these yields if we indeed that think, Carol, that we're going to be looking at a Federal Reserve hiking another 50 basis points or so in just about a week's time. And so who is going to be the buyer of some of these Treasury yields? And really the question is, how much higher do we need to go in order to get sort of that relative value, particularly with an equity market that's getting some of the froth taken out of it?
Yeah, I wonder, though, if the energy companies care. I know there's a headline that just crossed about ExxonMobil advancing to a record close. I'm looking at the S&P 500 this year. The 10 top performing names are all energy names. ExxonMobil is the 10th best performing name in the S&P 500, up 71% here. Though, you know, this story, I feel like it was a strong one last year, a strong one this year. And if you talk to folks in the sector, it feels like this is going to be something we're living with for some time.
Yeah, I mean, just seeing Devon Energy reporting a bolt-on acquisition as we speak. And what's also on the flip side of that, as we see the inflationary pressures, we talk about gasoline at $5 a barrel, $5 at the pump in general. We're looking at maybe a turn towards what happens with the consumer, with the retail numbers, Five Below coming out and the shares dropping after its earnings. So clearly we've got to keep an eye on where people decide they're going to be spending their cash, clearly not on cruises, potentially, according to Morgan Stanley.
Matt Maley, though, I believe when we were speaking with him on TV, had a good point that if inflation on Friday comes back down to 8% instead of 8.5%, does that really mean the gas prices are going to be cheaper when we're traveling this summer?
No.
Exactly. So
No,
I know it matters from an economic term, so from the consumer's perspective.
Yeah, and Bloomberg has done some great reporting on this. There's a lot of academic studies that shows you kind of the convexity, Taylor, that really isn't there when it comes to gasoline prices and the rest of what we see with regards to crude and just the general stuff. And I could tell you, I mean, we've written about this idea that it is having an impact. People are making decisions to trade off because they have to pay more to fill up their tanks. They have to pay more at the grocery store, and they've got to sacrifice something.
Yeah, that's exactly what analysts said about Philip Morris today, right? Or Altria, I should say.
They stopped smoking.
Yeah, I mean,
that's a good thing, right?
It is, but it speaks to the power of these prices. If they are so high, people are cutting back on things that oftentimes weren't necessarily considered discretionary, right?
Am I allowed to say that?
I didn't hear what you said.
Okay.
So I want you to
Meanwhile,
repeat
I
it.
think history has come out on your side and then a certain extent remain. But
History will prove I'm right.
Meanwhile, did you see the story on the Bloomberg Terminal about where it's expensive to be an expat at the moment? And when you look at some of the price points, Hong Kong, once again, still the most expensive. Yes, it's pegged to the dollar. It's a currency question. But it's also how much they're having to pay on their gasoline, how much they're having to pay on their rents, how much they're having to pay. I think their tomatoes per kilo was something extraordinary, like $11. So this
kilo.
Per coffee, it's $5 per coffee in Hong Kong. New York came up really high, so too did London because of rents.
What is going on?
Where's Duncan? Yeah, when you need it, huh?
All right. Well,
Duncan's okay.
It's just a reminder, right? Inflation, it's a global thing. Remember that.
Cheapest gasoline in Tehran, should you wish to go.
Oh, okay.
But I can't afford the flight to get
I'll add this
there.
to my bucket list.
All right, we got to run, guys. We'll have more to say tomorrow. That's going to do it for our cross-platform coverage. Radio, TV, and YouTube. Beyond the Bell is what we call it. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Boy, it's hard. This is, like we're going through these changes, these costs.
You're going to go to Tehran and bring a bunch of those red gas containers? Then bring them back here and sell them?
It's a little tough. Like, where do I pack them?
I don't think that's how it works.
Yeah, I don't think that's how it works either. Yeah, we'll see what that inflation print, like if it comes in a little light, can we start to think about a rollover and a peak? I don't know yet.
Well,
What?
let's say there was a peak, not last month, but the month before.
Yeah.
But what does a peak actually look like? Does it look like a gradual decline?
Is it like
8.3% last month and then 9%? Yeah.
Yeah, or does it stay up there for a while? All right, lots to think about, but let's also get to Nancy Lyons with a check on world and national news. Hi, Nance.
Thanks, Carol. The Justice Department is now looking into the handling of the Uvalde school shooting and has appointed a team of officials and outside experts, including chiefs of police, to be part of that probe.
Attorney General Merrick Garland said he acted at the invitation of Uvalde's mayor and has been promised the cooperation of local officials.
The independence, transparency, and expertise of the Justice Department can go a long way toward assessing what happened in Uvalde with respect to the law enforcement response and to giving guidance for the future.
Garland noted that his department has previously investigated similar violence, and members of the team probed mass shootings at a movie theater, a nightclub, and a college campus. In Washington, Irv Chapman, Bloomberg Radio.
Survivors and family members who've dealt with mass shootings in both Uvalde and Buffalo have been telling their stories today on Capitol Hill. Dr. Roy Guerrero, a pediatrician in Uvalde, says he took the Hippocratic Oath to do no harm, but others do not seem as committed to that premise.
Inaction is harm. Passivity is harm. Delay is harm. So here I am, not to plead, not to beg or convince you of anything, but to do my job and hope that by doing so, it inspires the members of this House to do theirs.
Guerrero says he cannot figure out if politicians are failing us out of stubbornness, passivity, or both. Republican Congressman James Comer says knee-jerk reactions are not the answer. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control. Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. I love when you get like a high and mighty.
Well, I'm just like, I don't know how this stuff works, but I'm pretty sure you have to tell the IRS what you earn.
It's like those people who get tips, right? Like, aren't you supposed to report it?
All right, well, those are cash tips.
Oh, see, there is like distinctions?
You know, it's funny. You go, I guess I was at a
Oh my
restaurant
God.
the other day.
Can you see Tim's face on
Well,
YouTube?
and it was still one. It's so hard to find these cash-only restaurants in this day and age, right? Especially because during the pandemic, it really accelerated the use of contactless payments. People were kind of scared to touch money. But I went to a diner a few days ago that was still cash only.
Was it like weird?
It was kind of weird, yeah. But I was like, okay.
Sweet?
Yeah, it was great. It was old school.
But I
Very
also
old
feel
school.
bad for people like with tips because I just don't carry cash anymore. And not all of the apps like let you put a tip on it. And I feel kind of bad. All right, so what we want to get
You just got to
to-
give them a 20, Carol, if you have a 20 with you.
Okay.
All right.
Everything's inflationary.
Yep.
Bloomberg Business Week's got a story about small business owners. Get ready for the era of the 1099-K. That's the tax form for disclosing.
My head is spinning.
That's the tax form for disclosing transactions with services such as PayPal, Venmo, and Airbnb. Until this year, anyone with less than $20,000 in total payments typically did not get a 1099-K, and thus, in theory, could avoid paying taxes on money earned on such platforms. Since January 1st, those companies have been required to report gross payments of more than $600 directly to the IRS.
So that means small business owners, as well as people who periodically empty their closets on eBay, will receive a 1099-K from any service provider where their income exceeds that amount. Oh, have fun with that, eBay.
So you mean like if I'm selling, like cleaning out my closet, which my husband would love me to
So-
do, and sell stuff, if I exceed,
So that
what's
means
the amount?
Airbnb has to send you an IRS form?
I guess so.
Wow.
So if you sell like a pair of designer
That-
shoes that
that's
are
a
like
big-
$601,
Yeah, if you sell them on a platform.
Wow.
That's interesting. So that means that these companies are going to have to sort of hire in those places for compliance.
It's gonna be part of the transaction, but you can create an algorithm, right, that just does that.
I don't know. You don't see me creating algorithms. I'm sitting here talking.
I do not see Tim creating algorithms, although that would be kind of, I think, fun. I don't know. All right, you're listening to Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market was down today. A lot of concern about rising inflation, particularly when you look at the crude oil market. WTI in New York up more than 2.5% today. Right now in the electronic session, 122.60. We also had to contend with a move up in the yields across the Treasury curve, a 10-year above 3% and a 2-year at 2.77%. Dow Industrial Average gives back about 0.8%. We had the S&P down 1.1%. and the NASDAQ Composite fell 0.7%. Twitter's board has reportedly, or is reportedly planning to comply with Elon Musk's demands for internal data. Shares in Twitter today picked up about, let's call it 0.8%. That's according to the Washington Post, by the way, which indicated that Twitter could provide this data as soon as this week. A lot of weakness in the chip stocks today. That was after executives at Intel said weaker demand will probably hurt financial performance. The stock was down about 5.3%, and we had the Philadelphia Semiconductor Index weaker by nearly 2.5%. Moderna is planning to ask the FDA to also authorize an Omicron variant targeting booster vaccine in the coming weeks. Now, company's data indicates the booster is comparable to the original COVID vaccine and better at fighting Omicron. Today, Moderna shares were up 2%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Feels like, Doug, we're just going to be poked forever, doesn't it?
It does.
I mean, we are with a flu shot. I don't see...
I guess.
I get it every year.
Yeah, I guess. All right, Doug Krisner, thank you so much. Well, more than a half a century after the U.S. Civil Rights Act barred racial discrimination in the job market, new analysis shows that wealth disparities between blacks and whites has been getting worse, not better.
The story written by Katerina Saraiva, who's Dallas Bureau Chief and Federal Reserve and economics reporter. She joins us this afternoon from our Dallas Bureau. Katerina, good to have you with us. How much of this has to do with home ownership versus equity ownership?
Hi, yes, thanks for having me. Yeah, that's a really interesting point. It's something that has driven this disparity over the past few decades, and that's because Black Americans are much more likely to have their wealth in things like homes and in real estate, compared to white Americans who are owners more of instruments like stocks. And while home prices have appreciated a good amount, as we know, it's nothing compared to the appreciation we've seen in stock prices. So that has really served to make white wealth grow a lot more and a lot faster than black wealth.
Can you share with us the number in your story? I'm not going to steal your thunder about black wealth versus white wealth in 2019, or non-black wealth, I should say.
Yeah, so, well, and we can talk about it in terms of black and white Americans. So black Americans in 2019, which is the most recent data, had 1/6 the wealth of white Americans on average.
So about $60,000 versus $338,000 for non-black households. That is massive.
Yeah, it's a huge gap. Yeah, absolutely. And when you look at it in terms of like the median, it's even greater. It's really goes. I think on a median level, Black Americans have about $24,000. So that's like the middle, right, of the distribution. And so it just goes to show that half of Black households have less than $24,000 in net worth.
So how do we solve this problem?
Well, I mean, there's a lot of different proposals out there. And this specific paper that I wrote about, which what has been really helpful about this is that they detail 160 years of the racial wealth gap and actual figures for racial wealth for, different race groups in America. So what they really find in their analysis is that it would take a combination of policies. So things like reparations, which a lot of proponents of closing the wealth gap advocate for, but also kind of a redistribution of asset ownership. So like a rebalancing of portfolios, as it were, so that you have equity ownership in a much more equitable way, so that Black households have more access to equity ownership, for example.
Well, it's interesting. I mean, there's a couple things too, right, going on. There's, first of all, being underbanked or unbanked, right? We've done so much reporting here at Bloomberg about the lack of access to the financial community and financial infrastructure that's out there that so many white Americans take for granted, but that's not the same case for Black Americans.
Yeah, absolutely. You really see those disparities along racial lines as well, with the percentage of unbanked Americans, being much greater for Black and Hispanic Americans.
I know, and the other thing, Tim, I think about, there's a story that we did about that, where Black Americans ultimately get to finally buy a home. If they do get a bank that will give them a mortgage, it tends to be a home in an area that doesn't appreciate as much because of the housing values. The neighborhood is just not as a rich one, if you will, or desirable as a lot of neighborhoods where white Americans buy into.
Katerina, I know that one thing that you've looked at closely is what happened during the last 2 years and during the pandemic, and I'm wondering how this has accelerated or if it's changed at all in the last couple of years.
Yeah, it has. It definitely, the last 2 years have kind of exacerbated that, because what you've had in the last 2 years is a real further concentration of wealth among very few people. So that has happened. We know that the top, wealthiest people in the U.S. are overwhelmingly white Americans. And so a concentration of wealth there means that there's kind of, less for the rest of the country. So that has certainly helped exacerbate this trend. And it's putting it on track to continue widening and to really, for it to take a long time for the gap to close. And it would take a significant shift in policy for the gap to close.
Katerina, you follow the economy, you follow the Federal Reserve. The Fed does put out this wealth data by race. They've been doing it for several decades. And we have talked, Jay Powell and others talking about the importance of equality and inequities that are out there. But how likely is the Fed, as it pursues an aggressive policy, does it have to kind of push to the background, those missions to, reduce the gaps between Black and white Americans? How likely is that?
Yeah, I mean, the Fed policy we see now of, very aggressively raising interest rates, it certainly, is likely to have an adverse impact on the labor market, right? Usually when we see monetary policy tightening, we then see unemployment increase. That's kind of the usual relationship. And so that would hurt things like wealth building, right? If people don't have jobs and aren't getting income, that's definitely a component of wealth.
All right, going to leave it on that note. Hey, Katerina, thank you. Katerina Saraiva, she's Dallas Bureau Chief, Federal Reserve and Economics Reporter here at Bloomberg News, joining us from our bureau in Dallas. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And coming up, this is a story, man. The statistics in it alone and just kind of where the bottom 50% of those that live in this country, how they are doing a lot better than they were pre-pandemic.
Yeah, it's pretty wild, especially after the story we just did with Katerina Saraiva to get this view. So it's good to pair those two together. We're going to get an update from Bloomberg Business Week in just a minute. First, though, Doug Krisner, what's going on in after hours right now and how the market's closed?
Well, not so much going on in after hours trading, but we were down across the board, Tim. A lot of concern on the street about rising inflation, and you only have to look at what's happening in the oil market to understand that concern, right? WTI up more than 2.5% today. Now in the electronic session, we're trading 122.60. Energy today was a positive, but there was a lot of weakness, which sent the S&P 500 down about 1.1%. The Dow Industrial Average weaker by 0.8% today, and the NASDAQ comp was off about 0.7%. Shares in State Street falling nearly 5.5% today. That was after the bank declined to comment on a report it's looking to acquire Credit Suisse. Now, earlier in the day, Credit Suisse warned of a second quarter loss, and as a result of that loss, we were told that the bank is considering job reductions across a number of different departments. The ADRs in Credit Suisse today were down by more than 1%. And one of the most read stories on the Bloomberg terminal, the SEC considering requiring brokerages to route retail orders to buy and sell stocks into auctions. That would be a part of the Commission's strategy to increase competition in the market. We also had to deal with a move up in yields across the curve today. A 10-year Treasury last quoted at 3.02%. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Bloomberg Business Week is brought to you by PPAC Private Wealth Management. A portfolio is more than a collection of assets. It's a path to your future. Visit ppacprivate.com.
Oops, helps if I hit the button. Hey, I got to say, I love the first paragraph of this Bloomberg Business Week story about how so far this year, quite a roll, war, inflation, market sell-offs, recession worries, got still those virus lockdowns in China, and record-breaking consumer pessimism in the United States. We just talked about this with our TV colleagues. And then you've got a new playbook by the inequality expert, Thomas Piketty. Hopefully I'm saying it correctly. Piketty.
Yeah.
I'm not good with my French. Anyway, he spotlights the unfairness of it all. This story will be in the new issue of Business Week out on newsstands later this week, already at Bloomberg.com/businessweek and on the Bloomberg terminal.
Those words by Ben Steverman, personal finance editor at Bloomberg News. He joins us from our Washington, D.C. bureau. Also joining us is Joel Weber, the editor of Bloomberg Business Week. He's with us in the Bloomberg Interactive Broker Studio. Joel, with so much talk of inflation, higher prices across the board, the pandemic and the challenges, in fact, the bottom 50% of Americans are in a relatively good financial position, at least compared to how they have been in previous generations.
Relative, really important word there. But what really stuck out to me in Ben's reporting here is how historic the gains of the pandemic have actually been. The bottom 50%, the U.S. is basically the most unequal developed nation in the world. And what we saw was a glimpse of maybe hope, but also these gains that could be incredibly fragile. So Ben, break it down to us. What really jumped out to you with these numbers?
So, yeah, I mean, basically we've seen a doubling of the net worth of the bottom 50%. You can kind of think of the bottom 50% as like the working class, and the thing is they never really have ever had that much wealth. So we're talking about going up. It's still much less wealth than the rest of the population has. But doubling is significant, and it means that people have more cash on hand to meet emergencies. And I've talked to a lot of people in this situation who've been able to use that money coming from pandemic stimulus and also from the hot job market, and they've been able to make some changes in their lives, like maybe move, maybe go to school, maybe just find a career instead of just a dead end job. And hopefully that's something that's good that's come out of this pandemic.
Ben, one of the things I love also about this story, and this happens so often in Business Week, is just going to individuals themselves and telling their personal stories. Just give us a highlight that maybe stuck out for you, because I think that just tells what a difference a higher paying job can make for some of these individuals.
Yeah, so one woman I talked to, she was a nanny, and in March 2020, she lost her job. And she actually had to tap like an emergency fund set up for domestic workers just so she could move back home with her mom and move in with her. But then when the unemployment checks started coming in, she was making more than she was as a nanny. And she was able to really kind of hold out for a good job and make a career shift. And so what she ended up doing, it took forever. There weren't any jobs for a while, and then it took a while to find a good one. But in September 2021, she started working from home for a tech company doing customer service. She loves it. And she basically doubled her nanny salary. And not only that, she has a path for advancement at this company. I talked to another guy who he had a criminal conviction on his record, and he lost his job. And when this criminal conviction came through, and he would then just cycled from job to job to job. He wasn't able to keep things. He wasn't able to get jobs. Wasn't able to get second interviews when they learned about it. Now, employers are treating applicants differently these days. They're broadening up the application pool, looking for good people. And now he's working at a hospital. He's basically a janitor, but this is something he actually thinks he likes, and he thinks he enjoys this work, working with patients, and he sees an opportunity to advance himself at this job.
Ben,
go ahead.
I want to make sure, because we only have a minute left, that we get to the flip side of this and the fragility that Joel referenced in the beginning. So give us the context there and what Piketty warns.
Yeah, I mean, inflation first of all could eat up all these gains, and we're still seeing wage gains at the bottom that are faster than inflation if you look at 12 months back or so, but that could get wipe them all away. The other thing that's worrying is just raising higher interest rates, tipping the U.S. into recession. Then you have a lot of people out of work again, and we have a much cooler job market, and we don't have these kinds of gains coming in terms of salaries.
Right. Yeah, and the other thing that we don't have time to point out really, but that I thought was interesting here is that it came, the bottom half, that gain came at the expense of the middle class, which has potentially serious ramifications politically and beyond, frankly. But it's, one thing goes up and another thing's got to come down, and it's like encouraging and yet at the same time, TBD what other things play out yet.
All right, our thanks to Ben Steverman, personal finance editor at Bloomberg News from D.C., and of course, Joel Weber, editor of Bloomberg Business Week.
Let's stay in Washington, D.C. now for a check the latest world and national news. For that, we go to Nancy Lyons. Hey, Nance.
Thanks, Tim. Some of those affected by recent deadly mass shootings are telling their stories. During a House hearing today, Dr. Roy Guerrero talked about being on duty after the school shooting in Uvalde and urged politicians to do their job.
Innocent children all over the country today are dead because laws and policy allows people to buy weapons before they're legally old enough to even buy a pack of beer. They're dead because restrictions have been allowed to lapse. They're dead because there are no rules about where guns are kept, because no one is paying attention to who is buying them.
Guerrero says he's not sure if lawmakers are stubborn, passive, or both. Kentucky Republican Congressman James Comer says Americans have a right to defend themselves against the rising tide of violence.
Knee-jerk reactions to impose gun control policies that seek to curtail our constitutional right to bear arms are not the answer.
Comer says the perpetrators of violence must be brought to justice. Michael Bloomberg, the founder and majority owner of Bloomberg LP, is a donor to groups that support gun control. President Biden is in Los Angeles for the Summit of the Americas. The White House says he'll present a plan to tackle increasing migration. He'll also be pushing a new economic agenda with Latin America. Russia seems ready to create a safe maritime corridor in the Black Sea so that Ukraine can export its grain to global markets. But during talks with Turkey, Russia demanded that for that to happen, the sea needs to be demined and Western sanctions eased. Ukraine was not part of the discussions and says the Russian promise is not credible. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stenovec. We are live at Bloomberg headquarters in New York City, streaming on YouTube in our Interactive Broker studio. We're going to talk in just a moment about the world's oceans because it is UN World Ocean Day. In the meantime, ExxonMobil, we talked about this in the close.
In the meantime, let's talk oil.
And now for something completely different.
Let's talk offshore drilling. I'm just kidding.
No, you're not.
No, I'm not.
We talked about Exxon hitting a new record high. I mean, Exxon, I pulled up the S&P 500, all 500 names year to date. The top 10, everyone is an energy name. Exxon is your 10 best or 10th best performing stock in the S&P 500. I think up more than 70% so far this year.
Yeah, the
70%.
company, it's North America's largest oil company, traded as high as $105 in New York. It did close at, I think, 104.58, if I'm correct there. Topping its previous record, it was set back in 2014 amid a 71% advance this year. Investors piling in energy stocks, Carol, you've talked about it a lot today, as demand for oil from reopening economies and diminished supply due to the war in Ukraine, sparking almost 60% surge in crude prices, complicating efforts to fight global inflation.
Well, yeah, it's going to be hard, right? I mean, we talk about core, right? You take out the food and the energy prices, and we look at inflation. But many would argue that because of this shift to move away from fossil fuels, we're not going to get the investments to increase the amount of production when it comes to fossil fuels specifically, and the shift towards more greener fuels and concerns about the climate. That you do wonder about these names, the energy sector, which has been on a tear, not just this year, but last year as well, if that continues, because it's just basic supply and demand. There's not going to be as much out there, and so those prices are going to stay high, and that's going to be a bummer for inflation.
There's a great chart in here showing the market cap of Exxon versus Zoom, a pandemic play, and it shows them crisscrossing in 2020, late 2020, and Exxon's market cap is now more than 12 times larger than Zoom's.
Does that even make sense?
Like,
why would you compare it against Zoom?
I think because of reopening versus it shows the change. How does this X, right?
I beg to differ, but we'll have to talk about that later. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market was down today. We finished very near session lows, although volume was very, very light. We had the S&P 500 giving back about 1.1%. Energy was one of the bright spots. We had a rally in crude oil today with WTI back above $122, and that seemed to fuel more concern about rising inflation. The government said that crude inventories and gasoline stockpiles were both lower in the latest survey period. And we also learned that crude oil production was unchanged for a fourth week. We also had to contend with this move up in yields across the Treasury curve. The 10-year is back above 3% now, 3.02%, as we get trading set for trading in the Tokyo session, a 2-year at 277. Speaking of Tokyo, the Japanese yen down today against the dollar for a fourth straight session. We're at a 2-decade low. Overnight, BOJ Governor Kuroda reiterated the need to ease policy support to help the economy. And we have the yen right now trading at 134.30, down today by 1.3% against the greenback. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. It is United Nations World Oceans Day. Many countries celebrating such for the past 30 years, looking to raise global awareness of all the benefits we get from the ocean and our collective duty to protect it and ensure its sustainability. From someone who dives, I have seen significant changes over the last 20 years when it comes to our oceans, and it's upsetting.
Yeah, it really is. Dr. Deborah Brosnan is the president and founder of Deborah Brosnan and Associates, also a marine scientist and environmental risk expert. She joins us via Zoom from New York City. Dr. Brosnan, good to have you with us. Carol has seen this firsthand because she has spent so much time in the oceans. What, Carol, over the last 30 years?
Yeah.
And I'm wondering how dire it is. Like, what do we need to know about how healthy our oceans are, or unhealthy?
Yeah, I think the clock is ticking for our oceans. Carol, you've talked about the changes you've seen when diving. I've seen a lot of those changes too, and it's tragic. It is very upsetting to go back to these areas and see the loss of coral reefs, the loss of fish, and the emptiness in the sea. I think a lot of people don't go underwater and are unaware of how drastic and how rapid these changes have been in the last 10 years. We have lost so much biodiversity. Half of the coral reefs are pretty much gone. 70% of fish stocks are either overexploited or exploited. So the alarm bells have been ringing, and I think people are finally taking notice. We really do have to step up. The moment is now. We have not a second to lose.
What can we anticipate when it comes to oceans, which feed so many and are such a key part of the food chain? You know, what can we anticipate in the next coming years? Because I think it's going to be very difficult, you know, in terms of keeping temperatures and the rises to a couple of degrees, or even that is going to continue to have a pretty significant impact. So what can we as global citizens anticipate when it comes to our oceans and the impact of that?
Yeah, I think you're absolutely right, is that these changes are already underway, and that we're seeing parts of the ocean get warmer. We're seeing other parts of the ocean, the acidity in the ocean increase, and the currents are now beginning to change. So for many of us, what we can expect is to see a change in distribution of many of the species that we're used to seeing. So for instance, both on the east and west coast, we're seeing a lot of the salmon move north. And for fishermen who traditionally depended on salmon in these areas, those stocks are declining. So we can expect to see drastic changes in the ocean, both in the distribution and abundance of species. And that in turn affects us directly, not just in fisheries, but take, for instance, coral reefs. Mm-hmm. So coral reefs are off the coast of Florida. They're in all the tropical areas of the world. A healthy reef breaks 90% of a wave's action. And what that means is that when you get a storm or a storm surge, that these reefs prevent the waves from coming in on shore. They protect people, they protect property, and they keep sand on the beach. So they protect us, they make sure we have nice beaches to walk on. As we're seeing the decline in reefs, and these reefs are collapsing, what we're seeing happening in the ocean is that the value, the services that these coral reefs used to provide us are now disappearing. Added to that, these reefs provide habitat for fish species and turtles, and that habitat is declining as well. So our oceans right now are not on a good trajectory.
Can we reverse that?
Yes, we can. We can certainly reverse that. I think this is the exciting news. for a long time, people thought the oceans were going to be fine. They were too big to fail. And now we're realizing that they're not. But what we're seeing now is a change in attitude towards the ocean. We're calling it a vibe shift. Mm-hmm. People have become aware that unless we step in to protect our oceans, they are going to disappear. And if they do, so do we. So what are we seeing and what can we do? The first is we're seeing an increase in technology, in innovation. We're seeing the use of AI technology, for instance, to replant corals. We're using AI technology to determine the health of reefs and the abundance of fish. So AI technology, new innovations are starting to emerge very quickly. Coupled with that, we're seeing the private sector starting to invest in the oceans. The blue economy has now become a very hot topic. Sustainable fisheries, investing in carbon sequestration in the ocean, investing in restoration in ways that actually produce a return on investment, which is new, but is very exciting. And we're seeing that happen around the world. And then we're seeing major institutions like the UN start to develop new funding mechanisms, working with the private sector to create these very large funding opportunities. So from a perspective of actually investing in the ocean, we're seeing a lot of this. And coupled with that, we're now developing ways that we can actually better sustain our fisheries, that we can restore these ecosystems that are being lost. So putting these two together, the financing with the technology and the interest and engagement of people, I think we have a lot of hope. But we've got to keep doing it and doing it quickly.
Dr. Brosnan, what do you hear from the ESG community, which we repeatedly, I often say it is, Tim too, like it's going through a reckoning. There's so much money going into the ESG space, and yet, it does feel like investors are saying, wait, we want more clarity about what these investments are. Could more clarity when it comes to ESG investing help certainly the pursuit of what you guys are doing and what people are doing to protect the oceans?
Yes, definitely. I agree with that. ESG is a catch-all right now.
Yeah.
And for a lot of businesses, a lot of companies, it's very hard to understand exactly what are the metrics and do these metrics make any difference to the environment and also to their bottom line? How do those two fit together? I think we urgently need more clarity in the ESG world. For instance, if we look at the ocean as a sector and we can break it down into subsectors, being able to identify clear metrics in ESG that are relevant to the particular industry, whether it's fishing, whether it's transportation, would provide clarity. It would provide standards that people could look at and adhere to, and a way for people to really be able to distinguish between what's real and what's greenwashing.
In our lifetimes, has it, I'm trying to figure out the right way to ask this, Dr. Brosnan, has it reversed and started to get better, or are we at a worse place now than ever before?
You mean for the whole ocean?
Yeah.
I'm sorry to say, I think it's gotten worse in our lifetime. I would
See,
agree
that's
with
really
Carol.
distressing to me because it's not like we're just learning about this.
No, it's not. These alarm bells have been ringing for a long time, and the rate of decline is accelerating. On the other hand, if you take areas of the world, both in the US, Australia, around the world, there are pockets where we're seeing a really big shift in basically trying to recover these oceans, and we're actually seeing success, whether it's marine protected areas, changing fishing practices. We are literally seeing things get better. It's the rate at which it'll get better and the scale of the improvements that we have to pay attention to.
Well, we so appreciate your time and appreciate your efforts and look forward to checking in with you certainly down the road and see hopefully that we're seeing some progress in the right direction when it comes to the world oceans. Dr. Deborah Brosnan, marine scientist, environmentalist, president of Deborah Brosnan and Associates. They're an international scientific consulting company, joining us on Zoom from Washington, D.C. And this is UN World Oceans Day. Sobering, right?
Yeah, it is. Went to the beach over the weekend. It was really nice. But there was a lot of trash.
There's a lot of trash, right? We talk about those
really
trash piles.
surprised.
Yeah. And it's just so important to the existence of us all. So hopefully that gave you some thoughts on this Wednesday. Have a safe evening, everybody.